You might have noticed on your Google AdSense account or your YouTube Studio that there's been popping up a message, action required. All YouTube creators and partners must submit their tax information to ensure any applicable taxes on your payments are accurate. So this video is going to walk through some of the changes of YouTube that they are imposing for creators, the updated tax information that you need to provide. Does it make sense? Why are they doing this from a tax accountant's perspective? So you just go click, 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 and then 0%. I win! Is that how it works? Hi, my name is Anne, and welcome to this channel, After Tax Effect, where we discuss what is usually considered an individual or a business's one of their largest expenses, tax, as well as some finance tips on people's road to financial freedom. Before we start into the nitty-gritty of this video, I want to make sure that there is a disclaimer that this is not specifically any legal or taxation advice specific to your particular situation. This video is mainly for the purpose of educating yourself so that you can do more research, that you can inquire with the right tax professionals. So I'm going to start off with right in from YouTube help. Someone has sent me the link and it explains the US tax requirements for YouTube earnings. You can just see it from the YouTube Help Center. It says US tax requirements for YouTube earnings. And then the first thing it states is Google may begin withholding US taxes on earnings you generate from viewers in the US as early as June 2021. Please submit your US tax info in AdSense as soon as possible. If your tax info isn't provided by May 31st, 2021, Google may be required to deduct up to 24% of your total earnings worldwide. Wow, 24% deduction on your total worldwide income? Does that make sense? Let's break down a little bit more about some of these points. Google may begin withholding US taxes on earnings you generate from viewers in the US as early as June 2021. So they're assuming that the content that is generated, that is watched by US patrons or people in the US are essentially US sourced income. So that income is sourced in the US, so it would be subject to US taxes. So that kind of makes sense to me. I don't think this concept of jurisdictions taxing on their source income is very new. It's very likely that a lot of countries tax on their source income. So if you had like a rental property in Canada, it would be the rental income would be taxed first in Canada. It doesn't matter if you're a tax resident of Canada or not, it would be taxed on that source income in Canada, just the same as you have an investment maybe in Australia on the Australia Stock Exchange and then it's paying dividends out. It would be sourced in Australia, or you had a bank account in the UK and then it was paying you interest. That income is sourced in that country. This concept of being taxed by that jurisdiction of where that source income is coming from is not really a new concept. So this kind of makes sense that the earnings that are generated from viewers in the US, it's assumed that those earnings are US source income. Okay, let's keep going. If your tax info isn't provided, then Google may be required to deduct up to 24% of your total earnings worldwide. This is quite a bit. It sounds like it would not be 24% of just the US source income, but 24% of the total worldwide earnings that you have related to YouTube or related to Google AdSense. And I would have thought that 24% sounds pretty high, but I would have thought that the default withholding rate in the US is actually 30%. So maybe this is low, but I don't know where the 24% is coming from. Maybe you can let me know in the comments. Okay, and then it says, if you're a creator in the US, you might have already submitted your tax information. When I looked it up, so I looked up this updated terms of service for Google, and in November 2020, royalty payments and tax withholdings. If you are entitled to receive payments from YouTube through any other agreement between yourself and YouTube, for example, through the YouTube Partner Program, all such payments will be treated as royalties in the US starting November 18th, 2020. Google will withhold taxes from such payments as required by law. Similar changes will be announced for creators outside the US in 2021. So I guess going back to these US tax requirements, I would think that the further information and this video is going to be primarily for creators that are outside the US, because if you're already in the US or if you're already a US creator, you would have probably already submitted your tax information. You would already get a slip at the end of the tax year issued from Google. And then it mentions Google is required to collect tax info from creators in the YouTube Partner Program if any tax deductions apply. Google will withhold taxes on YouTube earnings from viewers in the US from ad views, YouTube Premium, Super Chat, Super Stickers, and channel memberships. So this is saying that tax deductions or withholding taxes can apply to all types of income. It doesn't matter if it's just Google AdSense or as well as channel memberships. I'm not sure what the difference is between all these certain streams of income, but in the US tax eyes, it might be each of these streams of income might be different types of income, and so they might be taxed in a different manner. So this is what I think people are asking quite a bit. Why is Google doing this? Why are they withholding US taxes? I don't think there has been a change in the US IRS law. Here's what it says under the Google Help. Google has a responsibility under Chapter 3 of the US Internal Revenue Code to collect tax info, withhold taxes, and report to the IRS when a YPP creator on YouTube earns royalty revenue from viewers in the US. Chapter 3 is all about US withholding taxes on payments out to foreign entities as well as non-resident US taxpayers. Why are they doing this now? I don't think that Chapter 3 or the US Internal Revenue Code has suddenly changed all of a sudden. There was always a requirement for people or for withholding agents, in this instance in Google, to withhold these US taxes. I don't think there was a law change, but let me know in the comments if there has been or what you think might have happened. My presumption or my guess would be that the IRS, the US IRS, has actually ramped up their audit on Google and ensuring that Google is complying with their IRS obligations. Withholding taxes, it's very similar, I guess, like any withholding agent, and would have a similar obligation to withhold taxes on payment. It's just like an employer that makes payroll to their employees. They are required to usually withhold payroll taxes or income taxes on behalf of their employees. So it's not, Google's not taking that revenue, they're just kind of holding it and remitting it to the IRS or the tax authorities on behalf of the creator or the taxpayer. Why is there withholding taxes? Usually employers are required to withhold tax, and or else they're on the hook for not obligating with the taxation authorities. And usually there's withholding taxes for a couple reasons. There's a tendency sometimes on the taxpayer's part to not report all the income unless it is technically issued on a slip or that there is taxes being withheld already. And then number two is, I would say that usually taxes are withheld because by the time the taxes are already owed later on, usually as an employee, I've already spent the money. So I don't have any money set aside to pay for my taxes. So it's kind of a good thing that it's withheld off my paycheck, because then I can make sure that I have enough to pay the taxation authority or the IRS. Those are why there's like withholding taxes, which makes sense, because I could see that we have US source income, so IRS is probably like, we're entitled to this tax, but at the same time, it might not get reported in otherwise if there was no withholding tax. Oh, good. And there's a video. So I suggest watching this video. It's put out by YouTube. So I've watched this video. It's a really, really good summary actually for any content creators outside the US. It kind of summarizes what is required to do, but it's actually only at a high level. What was really important is outlining 3 points. So on how much are you taxed? If your valid tax form has been submitted. 2, how much your channel earns from US viewers, as well as if your country has a tax treaty with the US. If you don't submit your tax information, if you don't provide any information to Google, then they're going to assume that you are a US taxpayer. And so the problem with being a US taxpayer is that they are taxed on their citizenship and they are taxed on their worldwide income. It doesn't matter where they are in the world or where they are located or if they have tax residency somewhere else. So there's very good incentive for you to make sure that you provide valid tax information to Google, because if you don't submit anything, then they're going to tax you 24% on your worldwide income. I don't know where this 24% comes from. I'm not sure if it is a standard withholding tax percentage for individuals. This goes back to the content being consumed by US viewers, which is US source income, so that is going to be taxed. On the IRS website, I'll put a link down, and they actually list all the tax treaties that the United States has with every single country from A to Z. So looking at this, all the foreign countries, there must be I think 50 or 60 countries that the US has a tax treaty with. But there are countries that I would say that are not on this list, that do not have a tax treaty with the US. In Europe, I don't see Albania on this list. It doesn't appear that Cambodia has a tax treaty with the US. And then going all the way down, let's see, WXYZ. So Zimbabwe or Zambia, they don't seem to have a tax treaty. And most likely the default withholding rate for those countries is going to be 30% if there's no tax treaty with the US. There's actually a publication that the IRS has puts out. It's a publication 515, and this publication articulates or gives more guidance on the tax law, and this publication is usually updated every year, so it relates to that specific taxation year. Publication 515, it's pretty long, it's pretty daunting, but it does go through a little bit more info on the particulars on certain situations, certain examples, and also it goes into more detail on what the different types of forms are. It's more of a interpretative guidance on the tax law related to this subject area. The IRS actually has these, I would say, tax rate table cheat sheets. I wouldn't say it's every single particular situation, but at least it's a good summary. When you look at these tables, there's tons and tons of superscripts or notes, I guess, so depending on certain things. But what also this table has is it lists on the side for every single country that the US has a tax treaty with, is they actually list the particular treaty article or section that you might be citing. And this is what is most likely needed for the form that you're claiming a tax treaty benefit. So it mentioned in that YouTube summary video that Canadian tax residents can potentially claim a tax treaty benefit of 0% withholding tax with the US, and as well as in Mexico, it might be 10%. So we'll go look at this chart just to do as a self-check that they would have. So we'd go under, say, Canada that they listed in the video. We can see under royalties for copyright, 0%. And then we'll go check Mexico. And so they listed 10%. So this is under pensions. And then we'll go to royalties as well for Mexico. And all types of royalty income, the withholding rate is 10%. So these tax treaties are in place mainly to assist taxpayers so they're not succumbed by being taxed twice in both jurisdictions on the same type of income. So in other words, not suffer from potential double taxation that might happen. Can one still get a US tax refund if there's too much withholding taxes that are withheld, or if I don't submit the form right away? Yes, you can, but the process to get there and to get that tax refund is not the easiest, and it's a little bit more of a headache at times. If it's in the current year, before Google has probably remitted that amount of withholding taxes to the IRS, then you can request from the withholding tax agent. Google in this case, most likely you'll have to still fill in the same tax information here, so which would be completing those forms that are necessary to establish your rate and which tax treaty benefits you might be entitled to. But if it's after the taxation year, and then after Google has probably already provided or made the payment of withholding tax to the IRS on your behalf, then it's much more complicated. And yes, you can get a refund, but the compliance measures might not be worth it. You probably have to get or request for a US tax identification number from the IRS. You probably have to file a form claiming your treaty benefits, which treaty benefits, and then most likely you have to file a tax return as a non-resident. So as an individual, it might be the tax return 1040 NR as a non-resident for you to get that refund back to you. And then you have to decide if the cost and the hassle of going through all these things, maybe you have to engage a tax professional to assist you in collating these forms or preparing and filing these forms. So which might not be worth it in terms of how much refund you're getting. All in all, it's just easier to fill out the tax information now or before May 31st as Google has requested. So there's been some comments that I've seen from some creators that they're like, oh, Google is going to withhold taxes. Let me remind you that this is not necessarily a Google thing. This is a US tax requirement of all withholding agents, Google just being one of them. So some people are like commenting that they're saying, well, I'm gonna change platforms. I'm not gonna go with Google anymore. I'm not gonna go with YouTube. There's other platforms out there. Can you just change hosting platforms? Yeah, you can, but essentially I would think that a lot of platforms and a lot of software, if they haven't started already, most likely they're gonna go into this method as well on withholding the taxes to their foreign taxpayers, especially on US source content. Okay, so I'm gonna go through some of the questions that are asked as an individual in Google AdSense, and it's pretty much, all the questions are just very much laid out so that you're filling out these forms that's required. I'm only going to go through the individual one just because if you are a corporation or another type of entity, it can get pretty complicated pretty quickly. So definitely recommend to go seek some professional advice. And just because you might be a basic type of entity in your local jurisdiction, it might be actually something different in the US tax eyes, which may be taxed very differently to US standards, and the entity might not be able to tap into those treaty benefits that are there. So another content creator has shown me the questions that were asked, and they're pretty much based on how to complete this form. You'll select an account, whether the AdSense account is of an individual or a non-individual or an entity. It can be like a partnership, it can be a corporation, it can be a trust, it can be a charity, it can be a whole lot of things. So it's something that is non-individual. And then the next question comes up, are you a citizen or resident of the United States? That this question isn't very specific, but I would think it includes US green card holders too, because if you're a green card holder, most likely you're also subject to US taxes as well. The US taxes individuals based on their citizenship. It doesn't matter where a US citizen is located in the world, they have to report their worldwide income to the US. There's not that many countries that tax on citizenship. Most countries or jurisdictions would tax on tax residency and then tax those taxpayers on their worldwide income. But on citizenship, I want to say the US is the most prominent one for sure. And then the other one is, I want to say it's Eritrea? Where's Eritrea? I think it's in like Africa. Okay, Northeast Africa. I don't know. Are there any other ones? Okay, and then it goes into the different types of forms that are related to individuals. So you would select the form. Most likely, typically it would be the W-8 form, but there might be some people that would require a different form depending on their circumstances. And in these forms, you want to make sure that you are using the exact same information as what is issued on your tax documentation. And then going down this form, it asks for the country or region of citizenship. And this is interesting because it is assuming that the country or region of your citizenship is where you are tax resident of. Not necessarily the case. An example might be someone that has a passport or citizenship to the UK, but have never lived there, don't have any ties there, and they're not a tax resident there. This is a little bit deceiving, but that's okay. And then you're supposed to complete with your foreign TIN or foreign tax identification number. So this might be in Canada, your social insurance number, in Australia, your tax file number, New Zealand, your inland revenue number, or UK national insurance number, whatever it is. So you'd complete that. Wow, it even helps you out. It even specifically looks for this article or the section of the tax treaty that you are claiming tax treaty benefit of. This is pretty good. So you might actually fill out more than one form. And this is because there's different streams of income that YouTube has. So it says there's services, there's motion pictures like TV and film, as well as other copyright royalties. So I can see that. So there might be different tax withholding rates depending on the different types of income. It looks like you can fill out all of them even though you don't have those types of income. So Google actually pre-populates this form. That's awesome. And you can check how it looks. It's essentially the same form as if you're completing for another US company. The last checkbox, it mentions under penalties of perjury, I declare that the information and certification contained herein remain the same and unchanged from January 1st, 2020 to the present. January 1st, 2020? That's not even the current taxation year. That's the year before. That's interesting. They're asking retrospectively on your payments. So does that mean, I don't know, does that mean that Google's going to withhold taxes on your earnings from January 1st, 2020? So they're going to start withholding taxes starting June 2021, but can they go back to those earnings? I don't know what the requirement is, or Google might have a tax ruling with the IRS. I'm not sure. So, but that's interesting that it says actually January 1st, 2020 and not necessarily from June 1st, 2021 going forward or going prospectively. Let me know in the comments if you know of anything different that Google might be withholding taxes back to your earnings of January 1st, 2020. That might create quite a little uproar in the YouTube partner community. So in summary, probably best to fill in the form. If you don't fill in the form, they're going to assume that you're a US taxpayer and withhold 24% on your worldwide earnings. That's for all the views in every single country. If you fill in the form, only your earnings from the US views are subject to the US withholding taxes. And then if you are in a country that has a tax treaty with the US, you might be able to reduce that default withholding tax of 30% down to even 0 in some countries. And lastly, I guess even if there is some US withholding taxes and there's a tax treaty on the US, there's a very likely chance that you can claim a foreign tax credit in your country when you report on your local tax authority's return. Before you go click and try to get the best withholding reduced rate with whatever treaty, it might be worthwhile to go consult with a tax accountant, a CPA, or a chartered accountant, some kind of tax professional, even a tax lawyer, to make sure you're completing the forms correctly, to make sure you're getting the most beneficial rate that you are allowed. As essentially, when you started pretty much monetizing on YouTube, you've actually really started a business, no matter how big or small.